Are you sick of bad news when it comes to the housing market? Because I certainly am. We have some good news to go over this week, including purchase application volume rising for the fourth week in a row. Let's jump into the details and get to the bottom line. Good morning. A variety of information to go over with you today, but let's start with a couple of key housing indicators. We just got the National Case-Shiller Home Price Index for the month of September, and that showed home prices falling by 1% in the month of September, but that does reflect an increase in total year over year of 10% when it comes to home value. Home prices are now down about 2.5% from their peak earlier this year, which is a far cry if you really look at a broader outlook from a housing crash, which would look like a 20 to 30% decline in home values. To be fair, we do expect additional softening as the full impact of peak rates that we saw last month when they reached their highest point have not yet been fully realized in this data from September that we're looking at here. But another point to look at is just that a lot of the decline in home value has been concentrated in some of the bigger cities. So real estate is such a regional business that the data points here are going to be across the board and don't necessarily reflect exactly where things stand in any one given market. Another thing to look at that's very interesting when it comes to home values is this recent report that we got from the FHFA, specifically comparing it to the report we have from the Case-Shiller Home Price Index. The FHFA is going to give a report that measures home value appreciation as well, but it's going to look at it from a different lens because this is simply measuring home value for a certain subset of properties. Particularly, it's going to be for properties that have a conforming loan amount. So if it was a property that had a cash purchase or a jumbo loan, a $1.5 million property, not going to be measured in this report. That's important because the FHFA reported prices rising by 0.1% in September and being up about 11% year over year. So a pretty significant difference from the 1% decline in the Case-Shiller Home Price Index. And based on the difference, it's reasonable to interpret that some of the cooling in home values have come from the higher priced properties where there is less demand. So another data point we have that's worthy of taking a look at is pending home sales. This measures signed contracts on existing homes, so it gives us a close real-time indication of activity in the markets. Pending home sales fell by 4.6% in the month of October, and total sales are now down 37% year over year. An improvement in interest rates from the time period in which these figures were measured could definitely lead to some increase in activity going forward, so we'll keep an eye on that. We did get word from Lawrence Yun, who we've talked about previously in this series. He's the chief economist for NAR, or the National Association of Realtors. He said that he believes we should start to see buyers return to the market and activity increase. We have already started to see activity increase in purchase applications, which is going to be the leading indicator because this is the beginning of the process. And let's talk about that. Jake, if you can jump into what we've seen from the MBA in their most recent data and some of the news that we've been seeing there on 4 straight weeks of increases in purchase applications.
Yeah, thanks, Kyle. Well, as you mentioned, we did just get the MBA mortgage application data for last week, and this showed that purchase applications rose by 4% last week. Now, that does still put them down 41% year over year, but it's nice to see that move in that direction. Alongside that, interest rates declined from 6.67% down to 6.49% week over week. Now, keep in mind, these figures actually come from the week of Thanksgiving, so that could impact them, and there could be some delayed contract signing and better numbers on the horizon. Now, another thing we've discussed is how mortgage interest rates are heavily influenced by inflation. Now, we've also discussed that the Fed has a favorite measure of this inflation called PCE, which is the Personal Consumption Expenditure, and we got that report which showed that headline inflation rose 0.3% in October, which is basically in line with what experts expected. The year-over-year reading declined from 6.3 down to 6%. And this is down from 7%, which was the peak, and that was in June. Now, the core rate, which strips out the food and energy prices, rose by 0.2%, which is actually below estimates, and the year over year fell from 5.2% to 5%. This is also down from the peak of 5.4%, which we saw in February. Now, inflation is heading in the right direction, and it's expected to continue to do so. We expect interest rates to follow inflation and continue to improve as inflation declines. The bond market, and therefore interest rates, have already had a strong reaction to this news.
Good stuff, Jake. It's definitely nice to see some bright spots and good news in some of those data points that you mentioned. So appreciate you going over that. And if we take a quick look at the broader economic front, we did get information on Q3 GDP. This is a preliminary reading, but it showed that the U.S. economy grew by 2.9% in quarter three. And it's important to see that because this was, one, better than the expectations for this reading. And also, it follows 2 consecutive negative quarters of GDP in Q1 and Q2, which we've talked about earlier. That's the technical definition of a recession, 2 quarters of negative GDP. Although the ultimate determination, it does not just rely on that indicator alone. Now, looking forward, some economists are predicting what's called a double dip recession, where we would see another negative reading of GDP in the upcoming quarters for potentially Q4, but more likely in 2023. So we want to continue to keep an eye on those numbers, but also focus on and really look at the data when it comes to housing, because our opinion is that to operate as an excellent professional in this space, you want to be well informed and have an understanding of the market and the influences on the real estate market. That's why we're bringing you this series every week. We look forward to continuing to see you here, and we'll catch you next week on The Bottom Line.